Think your home is your ultimate safe haven? Well, I hate to break it to you, but to a massive insurance company, it's really just a denied claim waiting to happen. Welcome to the Ultimate Survivor's Debrief. In this explainer, we're going to talk about outsmarting the insurance trap. I'm sharing this because my own devastating experience taught me a brutal lesson. What you don't know about your policy can completely ruin you.
It actually doesn't matter if you own a flat in London, a house in the US, or properties across France and Germany. We literally all share the exact same terrifying vulnerability. We pay our premiums religiously, right? Trusting that if the roof caves in tomorrow, a check's gonna follow. But here's the devastating reality. That piece of paper you pay for every single month, it's loaded with traps perfectly designed to leave you bankrupt when the water rises. So let's get right into section 1, when the unthinkable happens.
Picture this. Your living room is completely underwater. Panic absolutely takes over, but this is exactly when you need a ruthless strategy. Step 1, obviously, get everyone to safety. Step 2, you have to mitigate the damage. Shut off the main water valve, board up the broken windows, do it immediately. If you don't, the insurer will just deny coverage for any subsequent mess. And finally, call your insurer to get that claim clock ticking before you even think about touching a mop.
Now, here's where people fall into the ultimate trap. Your first instinct is going to be to clean up the mess instantly, right? It's human nature. But insurance companies are literally counting on that. If you start throwing things away before documenting the wreckage with exhaustive photos and videos, you are destroying your own visual proof. You're basically handing them a free pass to deny your payout on a silver platter.
Moving on to section 2, the mistakes you make in the first few hours. I learned this the incredibly hard way during my own claim. The smell of my flooded house was just unbearable. So I ripped up and threw away this ruined, soaking wet carpet just to stop the stench. I didn't realize it at the time, but I was tossing my absolute best leverage against a massive corporation straight into a dumpster. That one simple, panicked decision, it cost me thousands of dollars in lost evidence. Don't do that. Okay, let's talk about the financial math behind your deductible, because it's an absolute minefield. Did you know that filing a claim for just minor wear and tear is often a devastating financial mistake? If a repair ends up costing less than your deductible threshold, simply calling and alerting the insurance company gives them all the ammunition they need to raise your rates. And the kicker? They pay you absolutely nothing. Look at how fast they penalize you for this. One tiny, unnecessary claim can trigger a massive spike in your premiums, instantly branding you as a high-risk liability. And if you file multiple small claims, oh boy, these multinational insurers won't just raise your rates. They'll outright refuse to renew your policy, basically blacklisting you from coverage entirely. It's wild.
Which brings us to section 3, the documentation death trap.
You absolutely have to build a bulletproof claim file. Let me be clear. If an adjuster makes you a promise over the phone, it means nothing, zero, unless it is written down. Are you logging every single phone call, saving every original purchase receipt, demanding everything in an email? Because without a rigid paper trail, your claim is going to vanish into thin air the exact moment they conveniently forget what they promised you. Think a denied claim simply goes away? Not a chance. Whether you're dealing with insurers in New York, London, Paris, or Berlin, these massive companies share data. A single claim, even a denied one, stains your permanent record in shared global databases like Clue. It sits there for up to 7 years, literally haunting your premium rates for the better part of a decade. Let's jump into section 4, beware the insurance adjuster. Listen to me very carefully. The company insurance adjuster is unequivocally not your friend. They might bring you a coffee, they might act deeply sympathetic while they walk through your ruined living room, but never, ever forget who pays them. Their paycheck comes directly from keeping the insurance company's profit margins as high as possible, which means their sole objective is to find reasons to pay you less. In the middle of my own personal nightmare, an adjuster actually walked into my charred, heavily smoke-damaged kitchen and casually labeled severe structural destruction as just cosmetic. Can you imagine? It's a standard industry excuse they use to downplay the disaster and avoid massive payouts. You have to be completely prepared to push back, and push back hard, when they try to minimize your catastrophe just to save themselves a few bucks.
All right, section 5, fighting the lowball offer.
The very first settlement offer they drop on your dining room table, it will almost certainly be a total insult.
I got an offer that barely covered 20% of my actual damages. And look, they aren't bad at math. They're just hoping that your financial desperation is going to force you to just give up and sign away your rights for pennies on the dollar. Will you blindly accept it or fight for the thousands you're actually owed?
Because you do not have to just roll over and take it. To flip this power dynamic, you need to weaponize independent contractor estimates and seriously consider hiring your own public adjuster. By bringing in your own experts to document hidden structural damage, you basically replace their biased corporate math with formidable, undeniable evidence at the negotiating table.
Their entire playbook relies on only quoting the visible cosmetic damage. But when your independent expert comes in and pulls back the drywall, they expose the hidden water damage and the mold that actually requires a full replacement. That gap right there, between their cheap cosmetic allowance and the actual replacement cost, that is exactly where you win or lose your financial recovery.
Okay, let's dive into our final chapter, Section 6, Winning Your Property Claim. The ultimate rule for winning your claim is surprisingly simple. Never, ever start permanent repairs without written approval. But on the flip side, you absolutely must keep every single receipt for emergency temporary fixes. Things like tarps or plywood. Honestly, a simple manila folder holding all these physical receipts and written emails is going to be your absolute best defense against a sudden claim dispute.
Knowing exactly where the money goes is so vital. Do you understand how your policy actually splits the payout? So many homeowners end up sleeping on a friend's couch for months, completely unaware that their policy includes something called Additional Living Expenses, or ALE. This provision is legally designed to cover your hotel bills and food while your house is unlivable. You are owed a proper temporary roof over your head, so please use it.
We've survived this explainer gauntlet together, and we've mapped out the survival blueprint for outsmarting the insurance trap. I endured this absolute nightmare myself, so you don't have to. But I've got to leave you with one final urgent thought. If disaster struck your home tonight, would you wake up tomorrow with the documentation, the strategy, and the solid proof required to force them to pay what you are rightfully owed?